An insurance policy is the main contract, but riders are the add-ons that change what the contract does. A rider can expand coverage, limit coverage, add a benefit, or adjust how a claim works. Small rider language can matter a lot when the claim finally arrives. A claim trigger should be read carefully because the rider may only apply after a specific event happens. A better comparison is that a jewelry schedule can close a property gap. A rider is an amendment attached to an insurance policy. It modifies the standard terms. Some riders cost extra, some are included automatically, some are optional at purchase but difficult to add later. The important point is that the rider becomes part of the policy, not a casual side note. An endorsement can add useful protection, but it can also add exclusions, limits, or conditions. The risk is clearer when water backup is not the same as flood coverage. In life insurance, a waiver of premium rider may keep coverage active if the insured becomes disabled and cannot pay premiums, depending on the terms. An accelerated death benefit rider may allow part of the death benefit to be accessed after a qualifying terminal illness diagnosis. A sublimit can make a rider look broader than it really is until the claim amount is calculated. In health or critical illness policies, riders may add coverage for specific diseases, hospital cash benefits, maternity benefits, or international treatment. Each rider has definitions, waiting periods, limits, and exclusions. The label may sound broad, but the contract language decides the real benefit. A sublimit can make a rider much narrower than it sounds, especially when the payout is capped below the real loss. In auto insurance, riders or endorsements may cover rental reimbursement, roadside assistance, custom equipment, or gap coverage. Gap coverage can matter when a financed car is totaled and the loan balance is higher than the car's actual value. A waiting period means the rider may not help immediately after the policy starts. In home insurance, riders may cover jewelry, art, electronics, water backup, home business equipment, or special perils excluded from the standard policy. A valuable engagement ring may not be fully covered under the normal personal property limit unless it is scheduled separately. Sublimits matter because a covered item can still receive only partial payment. Riders solve the problem of one-size-fits-all insurance. Two people may buy the same base policy but have different risks. One owns expensive photography equipment. Another travels often. Another has a home office. Riders let coverage become more precise. The risk becomes clearer when waiting period is treated as a real condition rather than background noise. The risk is assuming a rider title tells the whole story. A water backup rider may not cover flood. A hospital cash rider may pay a fixed amount rather than actual hospital bills. A critical illness rider may cover only listed conditions and may require specific severity criteria. A jewelry schedule may be useful when a standard policy covers only a small amount for high-value items. Cost matters. A rider that sounds useful may add premiums every year. The buyer should ask whether the risk is large enough, likely enough, and poorly covered elsewhere. Insurance is about protecting against meaningful financial loss, not collecting every possible add-on. Waiting periods are important when someone buys coverage shortly before expecting to use it. Underwriting can apply to riders. An insurer may ask health questions before adding a disability rider. A home insurer may require proof or appraisal before scheduling high-value items. The rider is not always available simply because the customer wants it. Jewelry schedules are useful because expensive items often need separate listing and valuation. Claims depend on documentation. If a jewelry rider covers a specific item, the owner may need receipts, photos, appraisals, or updated values. Without documentation, a claim can become slower or disputed, even when the rider exists. The useful comparison is gap coverage is treated as a real condition rather than background noise. Riders can also restrict coverage. An exclusion rider may remove coverage for a known condition, risky activity, or specific property issue. A buyer may focus on added benefits and miss that another endorsement narrows protection. Gap coverage is easiest to judge by comparing the loan balance with the value of the asset. Policy reviews are important because life changes. A rider for a young child, expensive equipment, rental car needs, or business property may be useful at one stage and unnecessary later. Keeping old riders without review can quietly raise costs. The claim trigger should match the risk the customer is actually trying to cover. A practical example is a homeowner who stores expensive musical instruments at home. The standard policy may have a low sublimit or exclude professional use. A scheduled property rider can create clearer protection, but only if the instruments are properly listed and valued. Water backup coverage matters because standard home policies may treat it differently from sudden pipe damage. Another example is a term life policy with a conversion rider. The rider may let the owner convert to permanent coverage without new medical underwriting before a deadline. That can be valuable if health changes, but useless if the owner misses the conversion period. The decision changes when waiver of premium is treated as a real condition rather than background noise. The best way to evaluate a rider is to ask what event triggers payment, how much is paid, what proof is needed, what exclusions apply, and whether the same risk is already covered elsewhere. Those questions cut through sales language quickly. Water backup coverage is a good example because many people confuse it with flood coverage, even though the policy may treat them very differently. Riders are not automatically good or bad. They are contract changes. A well-chosen rider can close a real gap. A poorly understood rider can add cost without meaningful protection. The difference is whether the buyer reads the mechanics instead of trusting the name. Water backup riders are often small additions that become important only after a basement or drain problem. Riders are especially important for people with unusual risks. A standard policy may work for an average household but fail for a home baker, frequent traveler, collector, landlord, or person with specialized equipment. The rider discussion should start with real life, not with a menu of add-ons. Renewal documents should be checked because riders can change. A benefit may be repriced, removed, capped, or renamed. Assuming last year's protection remains identical can create a surprise when a claim depends on wording that quietly change. A good broker or advisor should be able to explain a rider with a claim example. If the explanation stays vague, ask for the exact paragraph and a scenario. The practical test is whether you can picture when the rider pays and when it does not. When reviewing any policy, do not stop at the declarations page. Look for endorsements, schedules, amendments, and riders attached at the end. That is often where the practical details live. The main policy sets the foundation. Riders can decide how well that foundation fits your real life. A rider is useful only when its trigger, limit, waiting period, and price match the exact gap the policyholder is trying to close.